Analysts have lowered their expectations due to Tesla's third quarter deliveries. Investors are worried by that. The outlook for 2024, though, might be declining, so both groups would wish to look a little further out. On Wednesday, Emmanuel Rosner, an analyst at Deutsche Bank, kept his buy rating on Tesla TSLA 1.48% shares, while lowering his price objective from $300 to $285. His peers have been worrying about a third quarter delivery failure a lot. But a bigger concern was what caused him to lower his goal price. Tesla's third quarter 2023 deliveries and production could fall short of market estimations. But more importantly, Rosner noted, there is a significant negative risk to the 2024 consensus due to the year's limited volume growth. He has decreased his previous forecast of 455,000 units to 440,000 units for third quarter deliveries. That is more drastic than FactSet's most recent average forecast of 462,000 units, which is a decrease from 473,000 units a few weeks ago. Most quarters, Tesla delivery projections are revised as the end of the quarter approaches, but this third quarter's changes are more significant. Rosner and other analysts attribute all of the recent cuts to planned plant shutdowns to update tooling for an improved Model 3. A poor quarter does matter, but the demand for 2024 is the bigger problem. Tesla indicated recently at our Munich Auto Show investor meetings that it is no longer planning to expand output at Austin and Berlin factories to 10,000 per week, providing only incremental volume from these two factories next year, as well as minimal contribution from the Cyberpunk with slower and more complex ramp-up of the vehicle, according to Rosner. In contrast to the current consensus of 2.3 million units, our base case now is for Tesla to guide to about 2.1 million deliveries next year. Rosner's reduction correlates to around 9% of earlier projections for 2024. Without his cut, the Wall Street consensus projection for 2024 has barely changed over the past few weeks, falling by around 40,000 units, or 2%. Investors don't want to hear about declining estimates, poor production growth, or poor Cybertruck deliveries in 2024. For the next few years, Tesla wants to see average volume growth of 50%. With 2.1 million units, growth would be less than 20%. In 2023, deliveries are projected to total around 1.8 million units, an increase of around 40% from 2022. Rosner continued, on the plus side, with the business not attempting to push as much volume, there may be less pricing pressure next year. Tesla cut prices aggressively to start 2023, partly to drive demand growth according to CEO Elon Musk. Investors would like to see prices stabilize. They would also like to see higher demand for Tesla electric vehicles. Rosner still rates shares buy. He sees 2024 as a risk for the stock, but longer term, the next-gen vehicle is a game-changer for the industry, Rosner told Barron's, adding that it's critically important that the next-generation, lower-cost vehicle arrives on the market in 2025. Investors typically think of the next-gen vehicle as a smaller Model 3 or Y and refer to it as the Model 2, even though there is no official name. The Model 2 is supposed to open up more of the auto market to Tesla and be a vehicle platform that can sell millions of cars a year. Overall, about 41% of analysts covering the stock rate shares buy. The average buy rating ratio for stocks in the S&P 500 SPX plus 0.02% is about 55%. A year ago, the average buy rating ratio was about 64%. Price cuts and rising interest rates have sapped some analyst enthusiasm for Tesla stock. On Tesla stock, an average analyst price target is at $258. It was roughly $318 a year ago. While the Nasdaq Composite Comp plus 0.22% rose 0.2% and the S&P 500 finished flat, Tesla shares closed down 0.8% at $242 per share. Tesla stock was up almost 98% year-to-date entering trading on Wednesday, but it's now down around 13% over the previous 12 months. Over the previous 12 months, the S&P 500 and Nasdaq Composite gained by nearly 17% and 21% respectively. What are your thoughts? Will Tesla be on time with their third quarter deliveries? Let us know in the comments down below, and don't forget to like and subscribe for new upcoming videos of Tesla stock news. Thanks for watching.